Tuesday, March 14th, market analysis. Good morning, Stan Ehrlich. It's 10:05 in California, 10:08. And we always start out with the stock market indexes and the spider in particular, which is gaining some decent ground this morning. Remember, we were oversold on Friday and yesterday, Monday, while yesterday's lows were also in an area of support. Now, that's in the same range of late December when the market seemed to have formed a last shoulder low. That pattern's gone, but support is still there. And we are now bouncing back up to or above some important levels. We're still, if we were at the high of the day, we'd be right at a little resistance area. And let's zoom in on the daily data chart here. Lows a few weeks ago, and it stopped it, as well as the high on Friday. So we need to get above that, which is pretty much 393.5 on a closing basis. And then we'll probably gain another few more points quickly and easily. The important high is certainly the March 6th high, which was about 407.5. Closing above that is going to put a significant amount of price action below the market, as well as this oversold condition the last couple of days, and begin to perpetuate the longer term higher highs and higher lows scenario. Of course, the ultimate is to get above the high of February 2nd. That'd be a new high for the whole year, I believe, plus a lot more than that. Oh yeah, that's right. And above that, you'll have plenty of momentum to eat into a resistance area that's substantial. And that actually occurred way before the October 13th incredible turning point by October lows and a ER bullish engulfing, a whopper. And I'll start to take that little circle off there because that's going to be in there quite a while. Let's see if I can grab it. And I am not succeeding at the moment. Oh well, so forget it. I'll get that later. Whoop, I could do it here too. And there we go. All right. So, oversold condition, love it. Support area, turning, rally. We're up exactly 5 points a moment ago. That's unfortunately a little lower than where it opened. And we have been sinking, look here on the left side, almost to the low of the day so far. And that was in the first 10 minutes of trading. It's a 5-minute chart. And we just plain rolled over here at the high or a hair above 2 days ago. And we can't keep coming down like this. Luckily, we're getting into oversold condition on a 5-minute chart. That means you're probably going to have some sort of a bounce right off of 390 here. A point, that would be okay. How about 2 or 3 points? Challenge the high of the day and keep going up. That would be great. I certainly think that's not out of the question, but I do think we're probably trying to turn right around here at the moment. All right, let's look at the other indexes. The DIA, a lot of similarities here. Thursday and Friday oversold, came close to a support area, not quite, is maintaining prices above some previous, at least one major previous bear trend line for the year of 2022, that bear market, that trend line we're just sitting on top of essentially last couple of days. Similar to the low that was made back in the middle of December before a nice rally. Here, we've got to get above the trading range. Unfortunately, since early November, that's quite a bit of trading range and quite a bit of resistance. So 328 is pretty much the number to watch. Above that's pretty good. Right there or a little lower is stopping at resistance, which would be bearish maybe. Next chart, I'm going to go to the QQQs daily, and then we're going to go to some futures, which are really having an interesting day. QQQs didn't quite get oversold. Too bad. Otherwise, we did have an outside up day, a bullish engulfing, normally bullish by itself. We are up nicely on the day. There are no gaps to close below today's lows. That almost happened this morning, or it did, and it disappeared real quick. Needs to break some bear trend lines, needs to make highs higher than early March, 6th of the month, a week and a half ago, and then plow through the highest highs for months. Okay, futures markets. I'm going to start out with the wheat. I mentioned that we were pretty darn oversold here. Last couple days, we were down to 12. Highly likely that the market's going to be turning up, which it did by the end of that day. Yesterday, a little bit more, and today, a little bit more. We got the highest high for 3 or 4 days. I think we could rally easily back up to about 730, give or take a few pennies. And that's going to be resistance and turn down. Next chart. The E-mini, of course, is the Spider electronic original futures contract, electronic contract period of any kind. Now, rallying nicely because the hours of trading are significantly different than the SPY. We are way above where it opened, which was yesterday afternoon, really. So that's looking okay, but you'll notice that the high today is the same as yesterday, almost exactly, which is almost the same as the high of the day before, Friday of last week. And we've got a couple of lows a week or two earlier that are almost exactly that same damn price. If you look back in time, you're going to see that that's a resistance horizontal line we've got there, part of the cursor. I'll wiggle it just a little bit. And we need to close above today's highs. By a minor amount would probably do the trick because it'll just fly real quick a bit more right away when it starts to happen. I'm going to go to, not take quite as long. Major downside breakout in progress in soybean oil. This is quite bearish, probably to the tune of 50 or lower. And it's 56 and a third at the moment. Oversold now for a moment or two. Come on, Thursday, Friday, and yesterday and today still. So a little bit of a bounce here. Let's call it a nickel at the very, very most, 3 or 4 or 5 cents. Looks like it would be a good short sale. Next chart, natural gas. We got the bottom of the market exactly today with a green ER buy signal. So far, we've had that very nice rally, a modest downside correction, and looks like we may be involved in that correction still. I wished it would close near its high or higher than the high today or tomorrow. That would help me expect new highs since our buy signal. Next chart. Heating oil. Watch out. I keep talking about these two major support areas. If they're broken, that's very, very bearish for heating oil. We are going into the summer, spring and summer. So one would think that that would be a seasonal tendency, which it may or may not be. I don't know for sure. But obviously, the industry has it built into situations. So we'll see. Next, same commentary for the another energy, crude oil, below that red trading support level is a free fall. And it'll probably drop off a substantial chunk more toward 50, I would imagine, in short order. Bear markets fall much faster than bull markets go up. Commodities, securities, doesn't matter. Well, there are little idiosyncrasies with futures. Now, next, corn. On its way down. We did the breakout thing. We did the rally back to resistance thing. We did make new lows like crazy in the last several days. And it got oversold again. So it's no surprise that it's stalling out. Maybe we'll have a little bit more of a rally than this, but I certainly do expect new lows real soon. Next, silver. Caught the bottom on a bullish engulfing ER buy signal last Friday. Excuse me. We have slight new highs. We really don't need much of a new high. Look at the huge rally we had yesterday. It's just gigantic. Luckily, there's no gaps to go back down and close. This is holding gains very, very nicely. And we're not yet in overbought territory. Remember, I like the red line 75 or higher. So I could could see another maybe 23, 22 and a half in the next day or two. That's getting close to resistance at 23 and a quarter. Next, platinum. Hey, we got the bottom of the market. February 27th, green bullish engulfing, classic rally out of it, retracement back into support area in a general sense, not pretty accurately, but hey, new highs for the whole trend yesterday, an inside trading range today, a little lower, nothing terrible, not overbought. Don't expect much of a downside correction here, and I do expect to see new highs very soon. Next, gold. Now, it overbought today and yesterday. Not terribly overbought, but overbought is overbought, and it's yellow, and that means it's about to turn back down a little bit. The next significant wave up or down is going to pretty much dictate a much longer term trend, which at the moment is basically up. We have a bottom of a triple bottom in October, November, and late September, a month and a half. We have higher highs since then. We had a very, very good sell signal at the top of that last rally, and we have a buy signal at the bottom of that break and the lowest so far. And we have new highs. We are bumping against resistance almost already, but overbought. I think the odds are higher. But what it does in the next couple of bucks up or down could be rather revealing, since we're overbought at the moment and against resistance. And yeah, okay, next chart. Bonds shot through the roof 2 days in a row. I told you it was very oversold. Don't chase a market that's going down and oversold conditions. It's highly likely it's going to rally some. Bonds have rallied along with the 10-year notes more than I expected and faster than I expected, all the way up into the resistance area. The last vestige of resistance, unless you go all the way back to September. When, and I think we are, going to start closing at 134 plus, we'll be closing a new high ground and or new highs that same day, probably the same hour, since approximately early September. October, November, December, January, February, March. That's a half a year. So this is a very significant new high that I think we're going to see soon. But you're at resistance and you're overbought. So I'm not going to be surprised if there's not some screwing around in here. And it may be for weeks, a month, maybe two. But ultimately, maybe sooner than what I just mentioned, I think we're going to see new highs for 6 months plus. Next chart is 10-year notes. Same kind of commentary, just lagging behind a little bit. Overbought in its resistance area. The long-term trend may very well be flat to higher, starting higher. I like what I see overall, but again, overbought, and we're down a little today already, may lead to a little bit more of a retracement down, but I think more like a flat. And then new highs fairly soon. Soybeans, sideways trading, no comments. And I'm pretty much through with the commodities for the day. I'm going to skip forex and the sectors. Have a great day. See you tomorrow.